And now to showcase a presentation on account aggregators, a level playing field, I would like to invite on stage our speaker, who is a veteran of India's payments and consumer internet domains, having set up and scaled businesses across large organizations such as Amazon, American Express, and Nokia. Well, he is the CEO of Anumati, India's fastest growing account aggregator network. He also serves as co-chair of FICCI Task Force on privacy and data protection and played an active role in the shaping of the recently enacted Digital Personal Data Protection Act. Well, ladies and gentlemen, please put your hands together for Mr. Srikanth Rajagopalan.
Thank you. Thanks for that rousing welcome. I hope I can do justice to that welcome with my presentation. Thank you. Namaste, and thank you to Banking Frontiers for this opportunity. Most people know about what is an account aggregator and all that stuff, but I won't spend too much time in the technicalities and all that stuff. I'm not a techie, so I'm not qualified. But I will try and present the so what. Why should you care? What does it mean for you? What business and P&L outcomes can you really get out of it? And why, at least in my opinion, an AA network really levels the playing field across so many players. I mean, there was this very interesting comment that I heard in the morning that, we start this NBFC with the word non, and that might be a limitation, right? We are an account aggregator. We are also classified as an NBFC. We are regulated by the Reserve Bank of India. There are 14 account aggregators in the market, so you should be also asking me the question, why us, why Anumati? So I'll delve right into that. Basics, most of you might be aware, but I just want to make sure we set the level, a base level understanding. There are fundamentally, apart from the data principal, the customer that you see, there are three players in this ecosystem. On the right are the data fiduciaries, called the FIPs, or the financial information providers. Please remember this word fiduciary more and more stringently as you look forward. I'll explain what the data protection bill means. Essentially, this could be an SBI or an HDFC bank, or maybe one of your depositories where you have an account. On the left is a financial information user. This could be, for example, an NBFC who wants to underwrite a loan, needs your data, today has to make do with a very messy process using paper, PDF, so on and so forth, but today there is an option to get data at one click. In the middle is a consent manager, right? These are people like us and my colleague Munish. I don't know whether you're still around. So plenty of us account aggregators who, setting up this network, acting as consent managers, putting the data principles first and making sure that her data is going with her consent between these two entities. It's a very quick schema of how it flows. Remember that we are talking on behalf of the customer. Our entire license conditions, our entire way of thinking is to make sure that the data principal, the person who owns this data, is getting the maximum benefit out of it and knows at what point what is happening to her data. So there is a consent artifact. Once the customer is been identified by the bank, we send a consent request. We said that this customer using these credentials is asking for, let's say, 6 months of data. And then finally, the bank says, yes, I recognize this customer, and here is the approved consent and 6 months of data. The one thing that, again, is worth remembering is the first question that people might ask is, listen, you're putting a big guy in a big data store in the middle, right, between the bank and the NBFC, for example, between the FIP and FIU. Isn't there a concentration risk there? The one thing you would want to remember is that we're only a consent manager. We are data blind, which means that we simply manage consent between a receiver and a giver of data. We do not see the data. We do not even encrypt the data. So there is a natural compliance and security by design over here. Okay, this should do something. I'm going to talk more at an ecosystem level. Honestly, we're, it feels like we're in the 2016 era of UPI. I don't know how many of you would have been there around in the payments ecosystem, but look where we are today. It's an ecosystem building. Today, it's already cross-sectoral. What I mean by that is that it's not just another way to get a bank statement. An account aggregator such as Anumati allows you to get data from over 61 financial institutions. Don't hold me to this number. The 61 is, I think, already 65 or closer to 70 today because it's growing almost every week. You will find that across sectors where customers might have data, whether it's insurance, banking, GSTN, or DMAT accounts, these are all currently live on the ecosystem. A lot more is happening. Your pension data, your mutual funds data is still in what we call a beta phase. There's some tech testing happening. So you should expect, we are confident that by the end of this calendar year, this entire ecosystem of FIPs will be up and running. So what's really happening? These are big numbers. I mean, we're India. We believe in big numbers. I mean, the market size is massive and unbelievable for a lot of people. Over 1 billion accounts, bank accounts, are today what we call discoverable, which means that if you have a bank account in any one of those 60 banks, if you do an arithmetic sum, there are 1 billion bank accounts which today can be discovered just with the click of a button. We're doing about, as an ecosystem, we're doing about 16 million data fetches. There's a lot of definition complexity there, but if you just ask one question, if a customer wanted to share her data and gave permission, how many times was that successful and data flowed from an FIP to an FIU? That number is 16 million as of last month, and it's already growing at a 40% month on month. Honestly, as an entrepreneur, I wish there was another zero behind that. It was 160 million, and we would still not be scratching the surface. That is the size of the opportunity in front of us. So who are these people pulling data? We talked about who are the people supplying data, the FIPs. There are 61 of them. Who are the people actually using these data? Again, the pleasant surprise for most of us is that, again, there is a wide variety there. It's not just banks. It's not just, private sector banks or NBFCs. There's a whole range of FIUs who are, pulling this data. Second question is, what's happening with this data? What use cases are people using this data for? We're not surprised. About 60% odd is for the lending industry, which is directly relevant to this audience. Within that, we are seeing that onboarding, underwriting, and interestingly, credit monitoring is becoming a very strong use case. Some of the panelists talked about, it's easy to give away money, it's harder to get it back. How do you use an account aggregator to set up monitoring solutions? So in very simple terms, taking one consent from a customer, you can say that I will ping her bank account every month to check whether there is an ability to pay. Right? You have signals of ability and willingness to pay. This is a very strong signal of ability to pay. Just check your bank balance every, let's say, EMI due date -2. So all fancy stuff. All entrepreneurs love talking about what we're doing. The question is, why should you really care, right? And none of this is proprietary, not what we are saying. This is all what we've learned from our customers. Examples here are banks, because they have been some of the early movers, and we've got some, significant learnings from them. In their last financial report, Axis Bank actually made a statement saying that they've been the early movers in the AA ecosystem. They've seen that for the same sourcing effort, for the same target segment, disbursals have gone up by over 30% simply because they've been able to simplify the customer experience. 35% reduction in OpEx. If you simply like compare what it takes to process a paper statement or a PDF versus a completely digital data source, it's no surprises that we're seeing this OpEx savings. Surprisingly, at least from my point of view, one of the more complex use cases called card loans. HDFC Bank has actually reported that they've been able to disperse money into a dealer's account within 30 minutes. Now imagine if a customer is standing at a dealer showroom, he made a purchase decision, and can drive out with the car within the same half an hour or 1 hour's time. Imagine the kind of experience you can deliver to the customer. I'm not sure the last line is visible. There are chairs in front, but the other thing that most of you deal with is this document fraud, right? People are creative. People find ways to tamper with their statements to make it seem much more credit worthy than they really are. With an account aggregator, you're getting data straight from the CBS. Right? There is no man in the middle. There is no way that data can be tampered with. So the moment the data comes in, it is clean and machine readable. And that should give your underwriting and analytics teams a lot more comfort to work with the data. Okay, so, and this is something I kind of ask almost every financial services, especially banking professional, is why does your app look the same way for all your 10 million or 20 million customers? Why is the login screen the same? Why is the menu the same, right? Why can't you do something like what an Amazon does very smartly? All of us use an Amazon app here. Look around and tell me which two Amazon apps look the same. None of them will. Right? There is a reason behind that. They're able to hyper-personalize using a lot of data signals that are proprietary to them. Why can't a financial institution do the same thing? Right? You have some of the best brains in terms of analytics. You have tons of data, and you're getting a lot of data signals now from the account aggregator. Why can't you hyper-personalize for a target segment of one? Right? Imagine what innovation you can unleash on that. The other question that if you run a P&L, you will ask is, all great, why should I care now? Is this the right time? I have tons of priorities. Why should I invest in an AA now? I think the answer to that is really, do you want to shape how the ecosystem develops? There is plenty of work happening on standards, on technical specifications, on purpose codes, on fair use of data. People who are innovating along with us now get a chance to actually shape how the network behaves. This is a fantastic time to join the ecosystem and actually be at the shaping edge of the industry. And the last line, though it sounds very, very subtle over here, in my other role, I serve on as the lady pointed out. The Data Protection Act is finally an act. It's been a bill for 2 years or 3 years. I have to remind myself that it is an act. Now, remember that once this act becomes a set of regulations, you will need to prove one thing very simple, that when you collected the data, you had explicit consent from your customer while fetching her data. And you will need to prove it from an audit perspective, right? There are plenty of audit mechanisms today. Here is one more thing that's going to come at us, especially for the financial services industry. With an account aggregator in your journey, you are already future-proof for compliance, right? All of us have read the bill, and there are severe penalties for people who can't prove that there is informed consent from the customer. So if you want to, start moving now and make sure that when the rules come in, you're not scrambling, this is a great time to start. A little bit of a sales pitch. I'm a founder, I'm an entrepreneur, I have to sell, so please forgive the selfish pitch over here. Recently, there were some industry awards that got given out. We're very, very grateful to our partners in the banking industry. With Axis Bank and HDFC Bank, I gave you some use cases that we had put through. This is our proprietary research. We think we have about a 60-65% of share of the data fetches that are happening amongst lenders. Lending is not the only use case. You saw that PFM and a lot of other use cases there. But within lending, we think we're about 60-65% of the use cases. It's easy to get started. We are very, very mindful of the fact that people don't wake up in the morning and say that I want to provide consent to an NBFC to get my data. That's not a customer verb, right? We make sure that within the journey of, let's say, lending, we are as unobtrusive as possible. We get out of the way, right? With 3 clicks, you're able to get your data and move on and actually give the customer the data, the service she desires. So with that, I thought I would spend the next 5 minutes we still have to hopefully take some questions from the audience. Please ask any questions that come to mind.
Would you like to share some anecdotes and story? Some personal perspective.
Well, thanks for asking this. I mean, I kind of, when we started this whole journey into account aggregation. See, our DNA is with a company called Perfios Software. Perfios today has a lot of deep relationship with some of the NBFCs. one of the first things that we got asked is, listen, if AA scales, now who will need proprietary data fetches? Who will need Perfios? Right? What we realized is the number one limitation to any lender's digital journey is really data friction. Right? So if you're a very super organized person and you've downloaded 6 months of your PDF bank statements and you remember the passwords, etc., and at the moment that you're applying for a loan, you remember how to, upload the statements. That's a happy case, right? The reason that digital lending is a single-digit percentage of the overall lending today, at least in our belief, is that there is a lot of friction for the customer to share her own data. Right? That's a problem that we're solving. Right? So look at what UPI did to payments. Right? People still had bank accounts. People still visited the same merchants. People still shared money with the same people. All you did was to make the experience seamless. And today, all of us know the numbers. So my hope is that we are in the 2016 era of UPI. What UPI did to money, an account aggregator will probably do to data. So you can imagine the transformation that we can drive. So that's a personal opinion. Lastly, sorry, yes, a mic for the gentleman, please.
Anyway,
Yeah,
I'm audible? Yeah. This is Vijay here from One Roof Technologies, looking into business development. In the interest of time, I will give examples, and the question being, of course, I do understand, account is a very regulated, kind of a procedure, regulated entity. There are a lot of rules and regulations, full stop. The thing being, we do know NBFCs, banks, the regulator, the intermediaries, that these data exist and we need to function this way.
Yeah.
So what stops the entire ecosystem actually taking that way forward? Say, for example, the example being, I am sitting with a friend or I'm having coffee in a Starbucks. I immediately put a hashtag coffee. But somehow, whether it is insurance, whether it is NFC, or whether it is giving consent, we don't have that same enthusiasm. Right? Okay, we did this, we did that. So again, this is a repeat question, basically the mindset, or the service providers need to pull up their socks and make it more interactive and gaming kind of a thing to give that experience.
Thanks for asking that question. I'm sorry I didn't get your name, sir.
Vijay.
Vijay, sir, thank you for asking that question. You kind of hit the nail in terms of what we are dealing with, right? I think it's a combination of mindset and capabilities, right? Today, honestly, most FIUs, basically, let's say an NBFC, is looking at an AA as just another radio button on a checkout page to say, okay, give me 6 months of bank statement. Do you want to do net banking, PDF, or account aggregator, right? It's a start, right? To their credit, I mean, a lot of people have, worked with us, understood how this whole system works and all that stuff. So there is, today, they're kind of testing the waters, right? This whole ecosystem is 1.5 years old, right? Somebody reminded us that you guys are getting too worked up about adoption and stuff. 12-18 mahine hoye, so thoda thamba, right?
Cool.
I think the next step will happen when people deeply embed a data fetch into the overall experience. See, a customer is not there to share data. Customer is there to get a loan. How do you make this journey seamless? So that work is happening. The second is capabilities, because a lot of our lenders are working with legacy systems, right? It's not true just of lending, it's true of any product that they touch. So change takes time. Change takes time, even with the best of intent, best of brains, not so best of systems, change takes time. Which is why I think it goes back to an earlier point that should you start now or should you wait for this system to mature, right? And then there are operational issues. So for example, there are data quality issues, right? When you go and fetch data from a certain bank, you realize that their data structures are different, right? It's not as simple as a UPI use case, right? So the next 18 to 20 months are going to be more about fixing some of these operational issues, but the early movers will get disproportionate advantage. I hope that answers your question.
Thank you. You got it.
Are you guys going to replace CRMs? Will you ever replace CRMs?
So the question was, are we guys going to replace CRMs? I'm not the expert in the CRM industry, sir. I don't profess to understand the entire width of what a CRM does. To me, I think this market is big enough and nascent enough for many, many winners. Forget CRMs, even amongst account aggregators, there is Munish who just presented some time back, there is Anumati, there are 12 others. I think the market is big enough for many winners. I think it has to be a partnership of various service providers.
See, fetching data about the history of the customer,
Yes,
the CRA adds value by putting a score on top of it.
correct.
So that becomes an external input to internal decision making.
Yeah,
As you can see, the regulator is flowing out, particularly into the retail space, where internal scoring models are going to be, more encouraged.
Sure.
Let's put it that way.
sure.
Because they'll be more aligned to your internal policies, whatever else. So do you see the AA ecosystem sort of, being more for the retail side, providing the core data for this particular end output, and the CRA system probably would be more of corporate rating agencies than credit rating agencies?
Great question. And, it's an important line that you draw because AA today is optimized for retail individual customers, right? Because consent in a joint or a corporate account is very hard to establish, right? So it is limited to single ownership accounts, retail accounts. A CRA and AA data today, I think, should complement each other, right? I don't think one will replace the other. Now, it is possible that AA becomes also a channel to get credit data. We're, in active discussions with the regulator, but I don't think these are going to replace one another.
It's a cost issue too, Srikanth. If an user,
yes.
at the end user is going to be subscribing both to the CRA ecosystem and to the AA ecosystem, we are probably overlapping costs somewhere. And that could have to be, possibly looked at some point in time. I'm just blowing a whistle slightly ahead.
Thanks for that. That's great input. Okay, so one last thing. I'm out of time. Just one more thing. I'm a very big Bollywood and Amitabh Bachchan fan. This is my favorite movie. Right? No, I'm not making any comments of who's the good guy or the bad guy here. Mea culpa. Right? Today you have a level playing field. Right? So with that, thank you so much for your
Well, thank you, sir, for a delightful presentation.
Thank you.
So much. And now to felicitate our speaker, I would request Mr. Manoj Agarwal to please do the honors. Ladies and gentlemen, let's have a huge round of applause, please. Thank you once again, sir, for coming here.